Okay, let's get real. If you are self-employed, you already know the IRS feel like your business partner, the kind that doesn't show up to work but still take a cut. Here's the part most people don't realize. You can actually flip the script. Let's say you buy a truck for your contracting gig or a new laptop for your side hustle. Normally, you would only get little write-offs spread out over years. But with Section 179, you can deduct the whole thing this year, and thanks to the big beautiful tax bill that was signed in July 2025, the limit just jumped to 2.5 million. And this isn't some billionaire loophole. It's designed for people like us, the freelancer, the contractors, consultants, side hustlers, anybody filing a Schedule C. If you're not using it, you are literally leaving thousands of dollars on the table. Hi, I'm Mia. I'm a tax professional with more than 15 years of helping entrepreneurs and small business owners cut their tax bill and keep more of what they earn. Before we get into it, quick but important, this video is for education only. It's not tax, legal, or financial advice. Everyone's situation is unique, so make sure you talk to a qualified professional before making a move. All right, let's break this down. Let's talk about Section 179 in plain English. So here's the simpler version. Normally, when you buy something big for your business, like equipment, furniture, or a work vehicle, they're asset cool, but you have to depreciate it. So depreciate just means you take little deductions each year, like cutting your birthday cake into 5 skinny slices and saving one for each year. It's boring, right? So Section 179 says, nope, you can eat the whole cake now, so you can deduct the entire cost the years you buy it and start using it in your business. Why this matters? It means more money in your pocket today and not 5 years from now. Here is what's new under the big beautiful tax bill. So the Section 179 limit is now 1.5 million. It starts phasing out once you purchases hit $4 million. It applies to tax year beginning after December 31st, 2024. Oh, and Congress also restored 100% bonus depreciation for stock playing service after January 19, 2025. So here the translation, right? Between Section 179 and bonus depreciation, you can pretty much write up your entire shopping spree for your business in 1 year. This is for anyone filing a Schedule C. So that means sole proprietors, freelancers, gig workers, side hustlers, independent contractors, consultants, coaches, and creative people. Why? It's matter. You don't need a big company. If you are reporting business income on your personal return, Section 179 is built for you. Why should you care? Let's talk some real number. So look at example number 1. So if you buy a $45,000 van for your contracting business without Section 179, so maybe $9,000 a year over 5 years, but with Section 179, you can deduct the whole $45,000 this year. If you are in the 25% tax bracket, so that's about $11,250 in tax saving. So look at example number 2. So if you have an equipment upgrade, you invest $30,000 in machinery under normal depreciation, which is low. But if under Section 179, you can fully deduct the $300,000 now. So at a 30% bracket, that is $90,000 that you saved this year. Let's look at example number 3. If you are a big spender, just say you drop about $2.6 million. So the Section 179 covered the first $2.5 million. Bonus depreciation could wipe out the rest. So the next result is the entire $2.6 million could be deductible. So there's some rules, right? So now before you go and buy some random stuff just to save on taxes, Here are the guardrails. Number one, it has to be business property you can touch. Things like computers, truck, furniture, not your personal grow retreat. Secondly, place and service. You've got to actually use it in your business before December 31st. So buying and leaving in the box doesn't count. Third, more than 50% of business use. If it's mostly personal, it's not going to fly with the IRS. Fourth, income limit. Your deduction can be bigger than your business income. The good news, any extra can be carried forward. Fifth, vehicles has a special caps. You can just write up your luxury SUV unless qualified as a heavy vehicle. So always check the yearly limit on the IRS limit. So now let's thinking about some tax planning for 2025 and 2026. So step one, timing does matter. So you want to put asset into service before December 31st, 2025 to count for this year. Second, you want to stack it. So you want to use Section 179 first, then apply bonus depreciation on the rest. Step three, you can match to income. So if you got a big year in 2025, you want to buy now. If you think 2026 will be bigger, you want to wait and expand it then. And then step four, financing hack. Even if you finance that $90,000 truck, you can still deduct the whole cost now. Step five, think strategy, not shopping. Don't buy junk just to save taxes. Buy assets that help your business grow. Let me give you some extra kicks as bonus. First, accountable plan hack. If you pay with personal money, you can reimburse yourself properly so the business owns it. Now you can expense it. Use a pre-owned account. Don't have to be brand new. Used equipment can work too. Bundle items. Buy batch together for easy tracking. State differences. Some states don't follow federal rules. Always double check. Plan ahead. With 100% bonus depreciation now permanent, think about purchases over the next 2-3 years, not just this year. So let's look at a case study. I have here a freelancer buy $8,000 in laptops and cameras at 22% tax bracket, save about $1,760. That's basically a free MacBook. Another example is a contractor that finances a $90,000 truck, so can deduct the whole thing this year. That's $20 to $25K in savings. Now let's talk a small business owner that spent $2.6 million on equipment. Use Section 179 for $2.5 million. Bonus depreciation for the $100K. Can deduct the full amount, so that how small business scale fast without getting crushed by taxes. Let's do some Q&A. Let's just clear up some questions really quickly. Can I deduct my personal car? Well, only if it's over 50% business use, and even then vehicle caps apply. What if I don't make enough income? Section 179 is limited to income, but unused amount carry forward. Bonus depreciation can even create a loss. In Section 179, always better than bonus? Not always. The smartest move is usually to combine both. If you want to see how this plays out for your business, I have built calculators and checklists to help you compare Section 179 versus bonus depreciation. They are at our Pro Deduction shop on Etsy. And if you are ready for advanced training, check out accesswiteinstitute.com. Now it's your turn. What's the one thing that you love to fully deduct in 2025? A truck, a laptop, a pizza oven for your hustle? Drop it in the comment. I want to hear. If this helped, hit like, subscribe, and share it with another self-employed friend. I have get more schedule sheet strategy coming, so you don't want to miss it. Here's the bottom line. The big beautiful tax bill supercharged Section 179. As a Schedule C filer, you can now expend up to $2.5 million of business purchases in 1 year. The bonus depreciation cover anything extra. Use it smart, save thousands, and reinvest in your business. And reminder, this video was for education purpose only. It's not tax, legal, or financial advice. Everyone's situation is unique, so talk to a qualified professional before making a move. Thanks for watching. Go make those smart purchases, and I will see you in the next video. Mahalo!